Hey everyone, Mark Bushy here, man of real estate. Have you considered buying a home recently, but you're not sure if you're qualified to buy a home? Well, stay tuned. We're going to discuss Zegacy.com, a one-stop shop to go and find out if you qualify through either traditional or some more creative ways to get financed for your next home. Stay tuned. All right, welcome everyone. We have a special guest here today. I'm here with my friend Adam Zock. Adam, thanks so much for being a guest here on the Man of Real Estate channel today. Um, Adam here lives in Fargo, and he is a husband, father of three, and he describes himself as addicted to real estate, which I love because I think I'm addicted to real estate as well. So he specializes in getting people into homes that may not fit, standard bank requirements. He's helped dozens of people, about 50 people, I guess you've told me roughly that you've helped get into homes that maybe the bank said no to. He's a co-founder of Zegacy, which we're here to talk about today. And that kind of ties into another business he has called Home Equity Partner. So welcome, Adam.
Hey, thanks for having me. It's probably long overdue. I know we've been chatting a long time over the last couple of years, done a lot of transactions together. So it's good good to get on here. Thanks for having
Yeah,
me.
I'm happy to be working with you here on Zegacy. So why don't you tell us a little bit about, what Zegacy is, how you got the idea for this, and what does Zegacy do?
Sure. Yeah, this is kind of a complement to our existing business of Home Equity Partner, where it's more of what people would call like a rent to own or a lease with the option to buy. The idea being, hey, if some people can't quite get a bank loan, is there a way that they can lease it with the option to buy later until they can get the bank financing, but allow them to move now? And so where Zegacy kind of was the next spinoff is we had got accepted into an accelerator program here where they said, hey, what if we had these individuals that apply and you actually are vetting them 4 different ways in what we call a qualified mortgage, a non-qualified mortgage, a private mortgage, or a rent to buy. So then that way you give individuals multiple options. And for the people that have, a really good credit score and they're basically just shopping for the lowest rate, probably not a good fit for them. They have multiple lenders, and it's always a good idea to shop, mortgage brokers versus bankers in general. But if you know that you can get a qualified mortgage because you have above a 620 credit score, your DTI is less than 43%, and you got the income to support it, like you are well on your way. What Zegacy then is doing is basically saying, hey, we're going to give you some sort of pre-approval terms. As long as you make over $5,000 a month, there'll be some range of maybe 3% down to 20% down. But the idea is at least giving people the option. And then once they submit their information, having the marketplace competing to buy them a home, whether it's a qualified mortgage for Fannie Mae, whether it's a private mortgage from an individual for somebody out in California that just has, $500,000 that they're looking to deploy, or if it's in a rent to buy, situation where they're not quite, going to fit into the mortgage bucket. So that just, it looks like someone comes in, completes the free assessment. We then give you an email with like, hey, here's your probability of getting those 4 quadrants, the QM, the non-QM, the private money, or the rent to buy, like a percent likelihood, along with, hey, what's probably your number one obstacle from getting into those quadrants. And then from there, just allowing them, again, this is all free, no impact to credit score or anything like that. And then giving them the option of being like, well, I either like option 1, option 4, none of the options, all 4 options, and kind of just giving people more tools, because I didn't realize how complicated mortgages can get, and that there's, hundreds of thousands of people searching every day of how to get a home without, maybe the traditional mortgage route.
Well, and I work with so many people that come to me, they want to buy a house. And, sometimes there is challenges getting approved. It's not always, income or credit score. Sometimes it's like you're self-employed. I'm a realtor, I'm self-employed. I have a difficult time getting a loan. I'm getting a loan right now. Actually, as we speak, I'm actually getting qualified. But it's not as easy for someone who's maybe self-employed, or maybe they don't have the job history. Maybe they need that 2-year job history. There's a lot of factors of why it's difficult to get, qualified. And you and I worked together with a client here a couple of years ago, and that was exactly her scenario. She was self-employed and had started a new career for about a year. We worked together. I helped her find her property. You helped to get her in the property financing, and it was a great partnership with us, and it got her into a home. So what's the first step for people looking to get qualified?
Yeah, I think if they're looking for someone to maybe give them a little bit of guidance, Mark, you like talking with an agent is usually a good first step because they either have loan officers, down payment assistance, different things that, Mark and other people could generally, help them with. What we're trying to offer is like, hey, if you're really like not sure where to start, but just kind of exploring different financing options or what in the world is rent to own versus a private mortgage versus non-QM, or if you're like, hey, there's no way I'm going to get, pre-approved. If you go to zegacy.com and do the assessment, it's going to ask you about 13 questions that, again, you're just all self-reporting these. And from there, that's the first step. And then we'll reach out and kind of talk through the scenarios. Maybe we're a fit, maybe we're not, but in kind of our motto is we're going to at least give you an option of moving forward. And it'd be up to you to be like, okay, well, I'm going to fix my credit score. I'm going to figure out how to get the down payment. I'm going to figure out how to get a cosigner, whatever options that those would be. Or, we've had about, 100 people come through this, and some of them are just like, oh, turns out you're a great candidate for a loan. You just didn't know it.
Sure. Yeah, people underestimate. They sometimes don't realize that their credit score might be better than they believe, or that it's not as much of a down payment or whatever to qualify. So yeah, some people just qualify for a standard mortgage, and some may use some of these other options as well. I went through this assessment myself to test it out. So I went to zegacy.com and I used some fake information and stuff, just kind of filled it out. But it takes only a few minutes to go through that. It asks you these questions, like you said. And I believe it was later that day or the next day, you get an email back with the assessment of what the best options are. You've mentioned a couple of things: QM, non-QM, rent to own. What do those four options look like? What can you give a little description about each of those four options?
Sure. So I would say maybe 87% of all loans are what are called qualified mortgages. This is being sold on the secondary market, which is like, the typical, what they say, Fannie Mae, Freddie Mac, where you're following the 620 credit score, you're following the 43% debt to income ratio, just because it's like typically what's called the best loan product, which is for the best borrowers. And so like and I'm oversimplifying, but I'm going to call that generally bucket one. Sure. Bucket two would be like a local credit union, or maybe like what they call non-qualified mortgages, because they're not qualified, for that. So they're typically like a little bit higher interest rate, more of a down payment. But this could be like a local credit union that says, you know what, I'm not going to sell your loan to somebody on Wall Street. We're actually just going to lend out of our own bank, out of our own credit union. That's more of a non-QM flavor, where they look at you on a case by case basis and are like, okay, I get that you have an 800 credit score, you have 15% to put down, but because you write off everything, you show no income. Sure. But like, they're willing to take a chance on you because you've been banking with them for 5 years, or you don't have to show the documents. So it's typically more down. You have to have some minimum credit scores, and you're typically paying a little bit more than the best rate. So that's kind of bucket number two. And so that's Sure. what we're calling non-QM. 3 is what we're calling private money, where this is literally like if you had a dad, uncle, cousin, or someone that just said, hey, you want that $200,000 house? I'll give you $180,000. If you come in with $20,000, they'll take a first position loan, charge you, let's just make up an interest rate, 8%, that you pay them instead of paying the bank. It's literally like individual to individual. And so Sure. we have a few high net worth individuals that are just looking for money to put somewhere other than the stock market. Because what does the stock market with time probably get you? Like 8 to 12%. So these individuals are like, well, if I could get 8 to 12% but backed by real estate and not ride the up and down of the stock market, there's individuals that are just in like privately looking to lend money. And so Sure. that's kind of bucket number 3. And they have their own kind of criteria of what they would screen for, which can, whether or not you would use Zegacy, you structuring something like that, anyone can do. It's kind of crazy. If you had a real estate attorney who just wanted to draft up a first position mortgage for someone that had the capital or wanted to use their self-directed IRA, like people do that all the time. And it's kind of wild that even though, maybe that's 3% of all loans originated, being kind of the private, because most of the time it's like, oh, find a cosigner, and they're co-signing on the loan with the bank with you. but there's the potential that someone just has a 401k that they just want to lend out and get 8% or 10% on their money. And a real estate attorney just drops off a first position mortgage. They buy the house, they go through the title, all that same stuff. You just have a private individual instead of a bank on the loan.
Sure.
And then bucket number 4 is what we call rent to buy, which is there's 2 different companies. One of them being one that I'm affiliated with, that will buy the home for you, rent it to you until you buy back the home. And so they actually use their private money, their capital. So on a $200,000 home, they'll be putting up 80, 90, 95% of the funds to buy the home. You live in it as like a rental, paying $2,000 a month, and then you've agreed upon a purchase price and a monthly payment. So every month you're maybe making a couple $100 of equity, and you have the option to buy, but you're not obligated to buy. And so that's typically rent to buy. And there's, even in that rent to buy area, you could, again, do this yourself instead of going through a company. If a house is listed for rent, you could call up the property manager and just say, hey, is the owner willing to do this? Some people call it seller financing. Some people call it rent to own, owner financing. It's just like, hey, instead of me just renting this house or renting this property, what if, I gave you $200,000, but not right away. I'm just, building a little bit of equity every month, but then within 3 years, I'll buy the home from you. And that can be an attractive option. Again, if you just went on Zillow, if you want to talk to some owners, if you're already renting a house and you want to talk to the owner, that's potentially a way to structure it. And it's kind of pros and cons both ways, where if you're the buyer, you have the option to buy, but you're not forced to buy. So if real estate drops by 50%, you could technically walk away.
Sure.
But at the same time, if it jumps by 20% and you've already agreed upon a price, and so that's where the negotiations come through to kind of figure out if it's right for you.
Yep. And like you said, this is something you could do on your own, but you have the resources to connect people with as well, with your own company and other private investors. So that's kind of one of the couple of the different options that you can get connected with through Zagacy, and you're here to help them set that up. So that's awesome. I love that. It's I love the rent to buy option there, because your rent is actually going towards something. At least, they say now, like, you rent, you're paying someone else's mortgage. Well, in this case, you're actually contributing to yourself in the future. So that's awesome. Yeah. So with that, what is let's see, we got the Zagacy.com website to go to there. One question for you. I know we're talking about, with us two here and in Fargo here, are you doing this in other markets as well?
Yeah. So right now we're doing this in North Dakota, Minnesota, South Dakota is kind of the target that we're doing this for.
Sure.
But we have referrals out kind of anywhere across the United States that we can do. And what's interesting is we're a startup. So all we're trying to do is help people. Like
Sure.
Zagacy right now, for all practical purposes, we're in what's called like an accelerator program. So our goal is, hey, can we be helpful to people? And if so, look at what would be the next steps for this. So really the goal is, hey, how can we basically be like a home owner guide to people as
Sure.
they're reaching out? And again, loan officers are still great. Agents are still great. We just wanted to be a resource for those individuals that, might not, quite understand all the different options. And then, be helpful to someone like you, Mark, where you have different individuals that might not qualify. And if you got, lenders already, it's always a great stuff. But it's like, hey, if someone's like, hey, there's no way I can get a bank loan. It's like, okay, if they make at least $5,000 a month, they'll get some sort of approval terms, because there's no minimum credit score required on some of these buckets.
Sure. So you get the free assessment, you find out what your best options are. You'll get partnered with a local realtor that will help with the purchase of the home. And essentially at that point, the realtor is going to help you find the house. This is what we did with with the gal a couple of years ago. I helped find the house. We go through the standard process. You're going to do most likely an inspection. There'll be an appraisal, but depending on the type of loan you have there. And then everything's pretty much standard, like buying a house here. You go through the process and you get some keys and you own a house, or renting temporarily, but you're going to eventually hopefully own a house there. But yeah, so this is just a great way. I can think of so many different clients I've had in the past where this could have been such a great help for them. And I wish I'd known you before that, before I met some of these people, so I could have helped them out too. But Yeah, so I guess what are we missing? Anything else you'd like to add to this?
Yeah, I think the only thing is, the goal is to not take away from any agents or loan officers or different things. It's just like, I believe so strongly in home ownership that it's like, okay, is there, 20% of all mortgage applicants that are getting denied? Is there still a way that they can get into a home? Just because the bank said no, maybe that's just a not yet, but we can still get you into the home, and then you're going to refinance in a year with that same loan officer. Like if the loan officer told you no, we'd love to work with loan officers or other people, because just the value of being in a home over time, if that's what you want. I still believe like there's some people that just want to rent, whether it's apartment or house, because they,
Mhm.
they don't know where they're going to be in a year and they're not really committed. But for those individuals that are, 3 to 5 years, like I'm going to be in Fargo, or I'm going to be in Sioux Falls, or be in this school district or this area, I don't see myself moving. Just the idea of being in a spot, calling a place that's home, that's safe and secure, just really believe in home ownership. So just trying to get people towards that path, working with everyone.
Awesome. Love it. We have the same goals, it sounds like here. This is what I do for a living as a realtor. I help people find their homes, get their dream homes, find their first home, whatever. This is awesome. It's such a great partnership here. If you're watching from somewhere outside of the Fargo market here, you can go to zegacy.com. It's we'll post the link here and post it here. It's zegacy.com. If you're in my market here in Fargo, I'd love to visit with you and I'd love to help you out. You can just reach me here, just message me here through YouTube here. Glad to help you out. We go through the buying process, the whole thing, and we can get you set up through Zegacy and find the right funding for you as well. So Adam, I really appreciate this. This has been awesome. I think this is a great program, and I'm really excited to get this implemented with my clients right now. So thank you for sharing this with us.
Yeah, appreciate you having the conversation and look forward to it.
All right. Thanks a lot. Appreciate it.
Take care.
Well, I hope you enjoyed all that information from Adam and from Zegacy.com. If you'd like to learn more, of course, you can check out Zegacy.com, go get pre-qualified. If you want to meet with me here, if you're local to Fargo, give me a call. You can reach me here at 701-793-8543, or just comment below and I'll be sure to answer there. And we can meet up and discuss the home buying process and getting you qualified to buy a home. If you like the content you're seeing here, please subscribe. We would really appreciate that. And if you want to see new content coming out, hit that bell, get some notifications, and like the video. We really appreciate all that. And go ahead and share it with anyone you know who's looking to buy or sell or invest in real estate. Thank you.